Good evening from Chicago. I'm Charles Brown, Portfolio Manager with CB3 Financial Group. We're so glad you're with us tonight. This is our second weekly edition of Facebook Live with clients and friends. We'll give it just a couple minutes to let people connect here. Feel free to say hi in the chat box so I know you're here. Last week when we did this, we thought that we were going to be able to present slides and video, live video at the same time, and apparently Facebook Live doesn't allow for that. So this week what we did is sent you the slides that I'm going to be using ahead of time. So if you look in your mailbox at about 5:45 Central Time, you should see an inbox with an attachment. But while we're waiting for people to connect, I've got a few thoughts here. First of all, if you didn't get a copy of the slides, it means you're not on our mailing list. We'd like to send them to you. You can actually send an email right now to AAB, that's Alpha Alpha Bravo at cb3.com, and Alice will send you a copy of the slide deck. My thought here while we're waiting for people to log on is that adversity is inevitable, but misery is a choice. Adversity is inevitable, but misery is a choice, and I'm going to choose not to be miserable. Things have gotten somewhat worse, maybe even significantly worse market-wise since we last spoke together here a week ago tonight. But I do see some improvements in the world picture for the coronavirus and also in support for the markets. I see Rex joined. Hi, Rex. I see Allie joined. Hey, guys. Thanks for being here. I got a comic today. Again, I'm killing a little bit of time to let people log on, but I got a comic from a guy who said he saw this out there. A friend of his, I guess, is a big sports fan, and he's gone 2.5 weeks with no sports on TV, and he said he looked to the other side of the couch and saw a woman there and figured it must be his wife, and she seemed nice. While it's kind of funny, there's probably some truth to that. I think that in every situation where there's adversity, we have an opportunity to make better of it. I heard the joke that they're going to need a whole lot of pediatric doctors in November and December because of the expected baby boom later this year. So, you look at things like that and go, well, it can't be all bad. For many of us, we have an emergency fund, and when I started with many of you that are clients, and I realize some of you are not clients, and that's fine, but those of you that are clients, we talked for years about having an emergency fund, and we've never really needed it in the sense of, pulling money out of the markets. But this would be a time to look at that, and I'm not going to go into detail, obviously, in this talk, but think about, maybe connecting with me afterwards, later tomorrow or next week, and we can talk more about that. So let's see, Martha, I see online. Thanks for joining, Martha. Just sign in, say hi if you're here, guys, and I'll start probably in about another 2 minutes. But we may be shaken, but we're not forsaken. That's actually a quote from the Bible, but it has a applicability even just in the secular world. Certainly, we've all been shaken. I don't know if you realize this, but it was exactly 1 month ago today that was the peak of the bull market. So everything that's happened has happened in 1 month. There were last Friday and Monday, we had enough market activity that if you added those 2 days together, it was a year's worth of market activity in 2 days. So there's that old joke that says, boy, I had a bad week today. Well, we had a bad year in those 2 days. So things have been happening really, really fast. And so that's the purpose of the video, is to just, put you calm. Hey, Alice, I see you joined. And that's what we're going to do. So if you have the presentation, just, give it a look, but I'm going to go through it here. So what we learned from last week's video was that you wanted a little more structure. So rather than handle questions right up front, feel free to type them in if you want. But what I'm going to do is I've got a little 10-minute presentation, and then I'm going to answer questions that have been given to me over the last week or so. Hi, Sharon. See you. Thanks for joining. And then after that, I will answer live questions. So if you want to type in questions now, you can, or you can wait till after my presentation or till I answer the questions from the last week. There's nothing that says we have to be off the line in 30 minutes, but I do want to value your time. And so that's the plan. So here we go. So on part one, if you have a chart, then that's great. Give it a look, but I can describe this to you. Basically, what is happening from a technical point of view right now is we had a market peak in January of 2018, and then we had a pullback a month later, but it was just a pullback. It wasn't a bear market. And then another peak in October, and then in December of 2018, that's the real important low that we're looking at. So again, if you've got the chart, you'll see then it goes to February 19th. So we've got that December 24th, 2018 to February 19th, just a month ago today. That's the current up move. Now, because we've pulled back more than 20%, we are technically in a bear market, which we were not when I spoke to you last Thursday. But if you've got the chart in front of you, you'll see that yellow band. That's really the very sensitive line in the sand or line in the brick right now. We're trying to hold that. If it breaks on a weekly chart, it does not look great for this to be a bounce off the bottom. Hi, Julie. Thanks for joining. But we'll see how that works out going forward. I'm certainly watching it at literally every hour of every day. But the NASDAQ is holding it. And the NASDAQ is really the strongest market of the major four. So the Dow, the S&P, the Russell 2000 small cap, and the NASDAQ. NASDAQ's holding that. And so we're glad about that. So part one here, I want to talk about where we are with the coronavirus. Hey, Keith, thanks for joining. Our programs, some of them are doing slightly better than the S&P, some of them slightly worse. So the way I design our programs is we're trying to just hold where the market performs in down markets and then exceed the market by anywhere from 100 to 300 basis points on the upside. So this is our downside, which we haven't had to test, so to speak. So those of you in CG and DG and GI are beating the market. SG and OV are underperforming the market. CY is also doing pretty well. I see Ann join. Good to see you. So that's where that is. Again, as I said earlier, just 1 month ago tonight, I have to keep saying that. It's just hard to believe. It's never happened like this. It didn't happen in the crash of '87. It didn't happen in the depression of 1929. Everything here has happened to the downside in 1 month. Some good news is, and you may have seen this, so the majority of this COVID-19 news you're going to be able to see out on the internet, but I'm just telling you what I'm seeing and what I'm using to base my decisions on our portfolios. China reported no new cases this week, and in addition to not having any new cases, they closed a coronavirus hospital. Now that's a big deal. Why did they close it? Because they didn't have any new cases. They didn't have enough new cases. That means 10, 12, 15, let alone 10 to 5,000 to keep it open. So that to me is putting a definition on there, what we're calling this hump. When it starts, when it peaks, and then when it tails off. You've probably heard the doctors talk about a reduced peak. We want that peak not to go way up and down like it did in China, and certainly like it's happening in Italy right now. So yesterday, President Trump signed into law a multi-billion-dollar emergency aid package. That's the first. There's a second one and then a third one. And I'm going to handle that, talking about what those are in just a little bit here. But that's a big piece of news that the government is definitely getting involved. Congress is close to approving an additional $1.3 trillion in support. Lydia, glad you joined. Hi, Nellie. Excuse me. Treasury Secretary Mnuchin said $1,000 checks will be mailed in 3 weeks. I didn't even have a chance to update the slide on this because now it's going to be $2,400 for a married couple and $1,200 for singles. So that's the latest number. Okay, so this is a pretty big deal. If you've got the slide, call this up and we'll see. So President Trump has invoked the Defense Production Act. It's in 3 pieces, okay? Let's walk through these quickly. The first authorizes the president to require businesses to sign contracts and orders to fulfill necessary goods for the national defense. Now, it's not clear whether that means they move to the front of the line, but I'm guessing that that's what it means. The second is that the president can establish mechanisms such as regulations, agencies to allocate materials and services, which means that is absolutely the government to some extent taking on a partial nationalization of our industry. And the third, which is the most invasive, so to speak, authorizes the president to control the civilian economy so that scarce or critical materials are available for defense needs. Hi, Fran. Thanks for joining. This is a pretty severe sign. Now, just because he signed it doesn't mean it immediately goes into effect. But what you're going to see is, and I'll mention this on the next slide, Tesla and GE stepping up to make ventilators rather than car parts. I mean, seriously, this sounds like, World War II, right? But that's how Trump is seeing it. He wants to send taxpayers $500 billion and businesses about $50 billion in 2 rounds that would start on April 6th, which is at the end of 2 weeks from now. But importantly, and I heard him say this today, President Trump is now designating himself as a wartime president. So you can forget the Make America Great hats and the Rolling Stones, you can't always get what you want or whatever they're singing. Expect the Battle Hymn of the Republic and other wartime positioning. Whether that's a politicking position, I don't know, but that's how he's viewing the situation in America right now, that we have a silent and invisible enemy. Larry Kudlow, the director of U.S. National Security Council, suggested that the U.S. Treasury, those of us in the industry just dropped our jaws when he said this, will consider taking equity positions, that means buying stock, in the most hard-hit sectors, meaning energy, the travel industry, and consumer discretionary. Now, with taxpayer dollars involved, what that means is since taxpayers would be contributing to the recovery, that they would benefit supposedly by the gains. That doesn't mean we're going to get, when they sell the stock, when the Treasury sells it, because their goal is not to own it long term, that we would participate in that with lower taxes or in some way participate. So Federal Home and Finance Fannie Mae and Sallie Mae have announced 60 days of no foreclosures and no evictions. That's a pretty big deal too. I think that'll probably be extended to 90. And in the Eurozone, which is actually now the epicenter for this disease, since China clearly is on that downturn that we mentioned, Christine Lagarde stated today, there is no limit to what the ECB can and will do to stem this pandemic. And that's a big statement from someone in her position. If you saw my Sunday email, I said that I was sensing that we were one step beyond the beginning on this, and that assessment, in my opinion, is the market knows that this is a limited shelf life. They didn't know that in the crash of 29. They didn't know that in the crash of 87. They didn't know that in 2000, 2002, because those were all financially oriented. Same with 2008 and 9, financially oriented crashes. But this crash, if you will, did not happen because of financial reasons. It didn't happen because of fiscal policy. And in fact, this is important if you're taking notes. This could not have happened at a better time from a standpoint of the country. Markets were at all-time highs on Feb 19. The unemployment rate was 3.5%. Can you imagine if we had started this virus pandemic in a recession already, and if unemployment was at 6 or 7%? I mean, it would be devastating to the economy. So if we're going to get sick, we're doing it at a time when the economy is in a terrific place for that. So I think that's a really strong positive. We're starting to get data now that is occurring after the pandemic really got bad, and that was initial claims today. So again, if you got the slides, you'll see that the March 14th increased by 70,000, which was above the 220,000, which that itself was a pretty negative assessment. unadjusted number of claims increased from 50,000 to 250. So you can see the data on the chart there. The takeaway on this is that things are going to be rough. But the market, I believe, is going to now focus on this data and not focus on, is this pandemic going to wipe out the U.S. population? Because we can see from the China data that I gave you earlier tonight, plus the curves that are happening in other countries outside of Italy, really now what we have to do is focus on the data, and that's going to be probably starting with next Thursday's broadcast what we really look at. So the tough thing is that many businesses are closed now, as you know, and will not be reopening this month. Treasury Secretary Munchkin, you'll see here on this next slide, I don't know why he said this today, but he said, well, we have a 3.5% unemployment rate, and if we don't get fiscal stimulus from the government, that could rise to 20%. Well, we've never had 20%. If you've got the chart, you'll see that the highest on record back to before any of us were born was 11%. And I don't expect it anywhere close to 20, but I think they're doing that as a protective measure so that if it gets to 7 or even 8%, they can say, well, it's way under what we predicted at 20. So I think that's why they did that, but don't let that number scare you if you've seen that in the press. The thing is, though, how are the states prepared? So if we have increased unemployment, which we know we're going to have, I mean, I look out my office window and there's like a tenth of the cars that would be normally on a weeknight here. So if you have the presentation here, you can see the list of states and how they're prepared. Remember that unemployment benefits are paid for by the states and not by the federal government. So what would you think for those of us here in Illinois? Do you think we're prepared? Yeah, no, we're not. The only states worse are, no surprise, New York and California. But I know we have people here online tonight from Florida and Georgia, Montana. Those are good states. Those are dark blue here, saying that there's plenty of funding. So there could be some of these states, including my own, or those of you that are local clients here, that are going to have to reach out to the feds. And the feds have been willing to say, good morning, hey Jeff, how are you? That we're going to backstop you. So you guys have heard that this has got to be, I don't know if social distancing is going to be the word of the year for the the dictionaries, or backstopping. So if you don't know what that word means and you're afraid to ask, in baseball, behind the catcher there is a frame of fence or something to keep the ball from going into the next county, because pitchers throw so fast these days. So that backstop prevents it, so the catcher doesn't have to walk 900 feet to get the ball. And the government, by backstopping this, basically says we're going to allow some leeway, but we're not going to let this totally get out of hand. And the Federal Reserve and the Treasury, between the two of them, can pretty much stop anything. And in an election year, I mean, whether you're a Trump fan or not, you got to realize that there's some politics going on here. So, all right. So on this next chart, I want to spend a little bit of time on this. I know we're running just a little long, but if you've got the chart, great. If you don't, it's okay. I'm going to explain to you what's going on. So in previous market crashes, I remember exactly where I was standing in 1987 when Tom Brokaw came on and said the market crashed. This happened. The selling started and kept going and going and going and going all throughout the day. Same thing in 2001, 2002. My friend Tom Bowley at Earnings Beats had this great spreadsheet where he shows actually most of the selling is happening between the close of the previous day and the open of the next day. Now, how does that happen in the off market? Well, it doesn't. It just means that the futures are gapping down. So these big gaps that are happening, 4% moves. In fact, today, folks, was the first day we haven't had a 4% move in the market in the month of March. Let me say that again. The first time we have not had a 4% move in the market in the entire month of March. But this graph is showing, if you look at the yellow highlights there, that $53 on QQQ, which is the ETF that represents the NASDAQ, more than 85–90% of this move is happening in the overnight market. Now obviously they have to sell during the opening rounds, but when the futures move, the hedge funds come in and the pension funds, and they have to match what's happening in the futures. But then during the day, there's almost a move up. So if you look carefully, on the right-hand side, you'll see that a $100,000 account, if we had been smart enough to do this, and I can't imagine anybody was, and we invested $100,000 on Feb 19, and we invested it fully, and then sold it out at the end of the day and re-entered the next day, we actually would be up. We actually would be up. So what's happening is panic selling. And who do you think the strong hands are? The strong hands are the ones that are buying in all this hysteria. And it's what Warren Buffett has said all these years. You want to buy when there's blood in the streets, and you want to sell when there's euphoria. Well, it's too late to sell with a euphoria, but you sure don't want to sell when there's blood in the streets, because that's when everybody else is doing it. And that's how you get behind. Okay? All right, so going forward here, this is part 2. So between this meeting last week and tonight, I got some questions in emails, talking to clients, and I'm going to encourage you guys to do that this week. If you have questions after we're done here, send them to me, and I'll include them in this second section here. So the first question I have is, are my accounts safe, and how is your health? That's fair. Interactive Brokers and LPL, the two clearing firms that we use, have been operational with no downtime. I think on Monday, which was the worst day volume-wise in I don't know how many years. Interactive Brokers was fully operational, but the response time on their account management page was maybe 4 to 5 seconds at times. That's it. So they're doing just fine. And so don't be concerned about your money. As far as Alice and myself, we have been self-quarantined for 2.5 weeks. We're going to continue that until at least March 31st. We have no symptoms. In fact, I have increased my personal trainer coming to my home 3 days a week now, and tightened up my diet to maintain physical peak condition, because as you can imagine, the stress, my portfolio is down hundreds of thousands of dollars, just like many of yours, some of you more than mine, some of you less, but we know the pain's there. And to be able to make smart decisions on emotional decisions, you need to be in physical peak shape. So we're watching that for ourselves, okay? So this is a great question. What's the difference between the Federal Reserve's monetary and fiscal stimulus? Great question. Monetary policy changes the interest rates and influences the money supply, and basically works on the supply side of the economy. So supply side meaning we're going to give you lower interest rates, we're going to cut rates, we're going to free up monies from the Fed to be able to make it so the banks can loan interbank more easily. Fiscal policy actually means changing tax rates, not only for the corporate, but for individuals, with an attempt to try to influence aggregate demand. So one works on the supply side, one works on the demand side. This particular crisis, we have both. We have a dwindling of supply, because the credit markets literally froze up. I mean, you don't see this much in the news, but the bond market and the currency market both are much, much larger than the equity market. And although the foreign exchange, FX market had no issues, there were some liquidity issues in the short end of the bond market, and they're generally not talked about because they don't want people to be concerned. But the government's addressed that now. And fiscal policy generally has a greater impact on the consumer, though. Okay. Next question. It's also a good one. Do you think what the Fed is doing will make a difference, and what are your thoughts on how long will this take? So yes, I do think over time, not only monetary and fiscal, but their third tool, which is quantitative easing, all those three tools come into play. And I think that they will calm investors because of, again, this word that I mentioned earlier, they can backstop a downturn. It would be almost inconceivable to imagine a situation like 1929. The Fed was brand new, by the way, 15 years old, and all of the very advanced tactics and the interconnection with the other equivalent like ECB, I mentioned that earlier, European Central Bank, Bank of Japan, Bank of Canada, Bank of Australia. There's this coordinated effort where nobody wants a meltdown. So I do think that, yes, over time, that will be effective, all those three tools. So how long do you think it's going to take? Well, the length of time for the Fed's policies to kick in is entirely dependent on this curve, this peak risk, this peak impact. We know that China's way down here. Or if you're on the screen looking the other way, it's over here on the done side. But we are, and you know, we don't want it to be this high. We think that, you know, it's going to be more like this shape because of the draconian measures. I mean, we have just about having, you know, battleships in New York Harbor with hospital beds on them. Not quite, but they're really working hard to make sure that what happened in Italy did not happen here. This isn't a question on the screen, but I just want to address this with Korea. People are saying, well, so why did Korea have so few deaths and why are we so behind the curve? Well, the reality is Korea suffered through the MERS virus, M-E-R-S, the Middle Eastern virus some years ago, and they had lots of test kits available that they had warehoused from that pandemic. Okay, we didn't have that. We've never had a major potential pandemic like this. Now, just like 9/11, which was a horrible event in U.S. history, but things changed. It's safer to fly now than it was 19 years ago. I guarantee you the medical community will learn from this, and the chances of this kind of pandemic happening again, I think, are much, much smaller, or certainly having a flatter curve, okay? So be prepared. Now that we're in a bear market, what can we expect in the way of recovery for the market and more specifically our accounts? Fair question. The top 10 worst bear markets, if you use the Dow as the barometer, following the Great Depression, which is really an anomaly, shows that the average decline is right at 40%. If you got the charts, you'll see it says 39.27, and it lasts about 17 months, which is less than a year and a half. We're already there. We're already around 30%. So could we lose another 9? Absolutely. But I will tell you that Warren Buffett and Jeffrey Gundlach, two huge, Warren Buffett doesn't consider himself a hedge fund, but Jeffrey Gundlach does. Major players went into the market today with billions of dollars and, you know, made purchases, basically saying it's the opportunity of a lifetime. Could they be wrong? Could they be early? Absolutely. But I do see that as a positive. Now, the rallies that have followed these bear markets that I just discussed, within a year after that, stocks have been up about 45% and go on to average about 66% after 3 years. So that's a pretty ferocious comeback. After the 2009 crash, which ended on March 9th, 2009, by 2013, the gains were 200%, went on to be almost 300%. So the problem is if you step aside, stay out of the market, you're going to miss one of these turnarounds. And candidly, we made that mistake. Way back in 2009, we did not re-enter in full until July. We snuck in a little bit at a time, dollar cost averaging, beginning in April and then more in June. But it is my belief, folks, we are in a secular bull market with a cyclical bear market that has just begun. Cyclical bear markets can happen within a secular bull market because a secular bull market lasts between 10 and 15, sometimes 20 years. Think back to 1980, 2000, okay? All right, there's a chart here for those of you that have it. I'm running long, guys, I'm sorry, but it just shows graphically what happened in 1987, 2002, 2008, and how many months it took to come back. This is pretty much in sync with what I've told you earlier, but if you just want to see what that looks like graphically, you'll see that a whole lot of the return comes in the early part of the move, which is why if you wait to jump in 2 months or even, you know, a month sometimes, certainly in 2009, you would have missed 10 to 12% of the move if you just entered in April. So We believe we're well positioned in all of our portfolios, and we're here to stay the course. We do believe this is a secular bull market, okay? And I reserve the right to change that if something dramatically happens between now and the next time I see you. On your chart, you'll see here that there's a listing of the last bear markets see, we were already in a bear market when the October 19th of 87, you remember that crash? We were already in a bear market. Okay, that's what makes that an anomaly. And then, of course, the 2000, 2001, they're all there for you to see. This does not last as long as it feels it's going to last right now, because right now it seems like we've been just, bombed back to the Middle Ages or something with these stock prices. But we've been here before. Those of you that have been with me since 2008 and 9 and saw the drawdown in 2011 and 2016, we've been here. This is more significant than those, but it's not as significant as what happened in 2008 yet. We're watching it, and we'll tell you if that's what we see. So those are the questions from the last time. So I'm going to take questions now. And let's see. Let's see here. From Anne, I don't believe that China is reporting. All that China is reporting. I don't believe anything about China. I don't know if the source of finding out that they have no more hospitals, or they've closed their hospitals that I reported earlier, and that they have so few cases that basically they're just not reporting anything new. They don't have any reason to give us that data because it doesn't make them, I guess it could make them look good because they're going to claim they're on top of the disease. But if China were trying to hurt us, they would do whatever they could to keep us very concerned. But what this tells me is we first started hearing about this. President Trump banned flights from China on January 31st. There's a guy named Bill O'Reilly, whether you like him or not, he first reported on January 23rd that this virus is coming out, this is serious, we got to pay attention to it. That's not even 60 days ago, folks. It's not even 60 days ago. So the cycle may go up, but the width here seems to be pretty short. I don't think we're still seeing mega new cases, on July 4th. That's just not the data that we're seeing right now. Could we still have new cases and some concerns on Memorial Day? Yeah. But I'm not seeing it through the summer, especially because of the season. I mean, that's the other thing I mentioned, that this could have been far worse had we already been in a recession, which we weren't, or if this virus had come to our shores in October, right at the beginning of flu season. But it didn't. It's on the way out now. Granted, it would have been better if it happened in May, but probably wouldn't have happened at all if that had been the case. So hope that answers you about China. Trainer, okay, lockdown, Nellie, or lockdown. Can you give me more context on, are we going to go into lockdown mode? If that's what you ask, I'll address that. So you've got the governor of New York, Mario Cuomo, arguing the New York City mayor, because the mayor is saying, we're going to shut down. We're just going to have to grind this to a halt. We're going to put everybody in lockdown. Well, the governor is the only one that can do that. I realize when you're mayor of New York City, you probably think you're even more important than the governor. But to my knowledge, and I can research this, I suppose I should have before I got on this call, but I think it's the governor that can, especially if it's a major city. Governor's not really going to care if somebody shuts down Dixon, Illinois, right? But if it's a major city that's a hub, a transportation and commerce hub, I guarantee you the governor's going to get involved in that. I don't see that happening. I think this social distancing, I mean, what's the most valuable asset we have right now? Distance. The most valuable asset tool we have to prevent the spread of this disease. You can say it's masks, it's test kits, it's all our hospitals. The real tool that we have is free, and it's called distance. So remember that. It's important, and obviously cleanliness too. So let's scroll down here. Shut airports down at this time. Thanks, Ann. No, I don't. Now, Midway shut down yesterday. shouldn't have laughed. I'm sorry. You know, the news is so hysterical. The media, it just really bothers me. But be that as it may, Midway was shut because 2 or 3 air traffic controllers were discovered to have the virus. And they work in close proximity, and those are very elaborate stations, you know, in an air traffic controller. One of my classmates actually was one of those. And basically they sent them home, and they had to sanitize the whole working area so the rest of them didn't get it. And I think Midway's back online now, but it could have been down for 24 hours. Fortunately, it wasn't O'Hare, but I guarantee you that policy now has changed all across the country. The sanitation protocols for airports, for hospitals, for train stations. I mean, folks, there's going to be good that comes out of this in the same way, and I'm being very careful to say this, that after 9/11, our security measures changed in this country to a significant degree. So, in my opinion, when this happens next year, or when we enter this new flu season in October, it's going to be like landing at D-Day as far as how this country approaches that, because no one wants this to happen again, for the loss of life, for the chaos that it's caused in society. Never again. Ever again. So I hope that answers your question. Have you heard that student loans are being canceled? I have not heard anything about it being canceled. What I am hearing is not forgiveness of debt, but deferment of debt. Yeah, I mean, if you're asking me to weigh in on this, I don't think that we should be canceling student debt because of this. I don't think we should be canceling corporate debt. Now, the whole idea of the government stepping in and taking equity positions, either by purchasing stock or selling puts, which is an options play that would allow you to enter a position, you know, with an option, actually a short option, if the market went down far enough. A couple traders online will know what I'm talking about with that. You know, that's an okay proposition, but there's risk to that. I'm all for interest-free loans to corporations, maybe a waiving of payments for 90 days for students. I mean, they're not in school. I don't even know how they're going to have graduations. So, I mean, this will be the first time, as the musician in me says, Edward Elgar's da 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 da. I mean, you'll never hear that this season. I mean, it's crazy the change that this has caused in society. But I see. Thanks, Nelly. There was another airport that happened today. Yeah, I'm not aware of that because I'm trying to follow the upfront, you know, physical news here that's affecting us. But you know, this curve is taking off, and we're trying to get it to turn over. I guarantee you that's why President Trump and Vice President Pence are standing up there every day, and they've called in a lot of amazing people. I don't even know how you pronounce the guy's name, Dr. Fauci, F-A-U-C-I. I mean, that guy's going to be 80 in 6 months, and he's working 7 days a week for his country. That is a civil servant. You know, we just have incredible people working on this. It makes me proud to be an American. Sorry for that editorial. From Jeffrey, do you believe, whoops, my screen rolled here. Do you believe people are overreacting and not using common sense? No. Is that possible? Certainly, I think that's the case. I think that our leadership is playing it safe. It's much better to say, you know, we lost some GDP. We're going to stand in there and backstop those businesses. We're going to give small business loans. We're sending out checks, $500 billion in checks. Yes, your profit and loss statement for 2020 might not look as good as you wanted it to, but we stopped the deaths. That's what the federal government's job is to do, in my opinion, is to protect our borders and to encourage commerce. The president, right or wrong, sees himself as a wartime president with this invisible enemy that has invaded our borders, and he is going to do everything he can to stop it. So our lives will change after this is over, no question. Cleanliness is next to godliness. That's great. And we never realized just how important that was. And sanitation and personal hygiene, it's all changing. Thanks, Ann. So is Carnival Cruise stock goodbye now that it is nosedived? We're not at the bottom yet on the cruises because we don't know how long it's going to be before people can get on a cruise. Not that I can see you, but raise your hand if you want to take a cruise in a month. How about 3 months? How about 6 months? How about a year? Yeah, probably. Okay, well, if it's a year, that word backstop's going to be in italics for the Carnival and the Norwegian Princess. Yeah, so it's not time yet. I need to see where this peak is. I keep doing this wrong because I realize you guys are looking at it the other way, but okay. We need to see where this peak is because that's what the market's waiting to see. That's what all of us are waiting to see. If we can escape this in like a 2-month window like China did, or if it's just going to turn into an Italy thing, which I don't think is going to happen. So graduations in Georgia have been canceled until further notice. Yeah, I'm going to do a little sad face on that. I just sang the Elgar graduation march for you because it may be the only time you hear it this season. I don't know what you do with that. I mean, what about weddings? Anybody thought about that? There's got to be weddings that are canceled. It's just, maybe that means we're going to have a very busy autumn. I think I quipped earlier that, they're expecting to desperately need more pediatricians in November and December because people are staying home, and maybe there'll be a mini baby boom here. But yeah, we just got to get to this point where we can see where this peak is. Are we going to follow the 2-month trajectory of China, if in fact we can believe their data, or is it going to be more like Italy where it's still a mess? I think it's going to be closer to the former. So Fauci, thank you. Fauci, thank you. Appreciate that, Chris. Ann says no cruises. Yeah, and I do know, he's one of my friends here, has got a wedding in, I think it's Rockford, in August. Probably pretty safe for August. I was going to get tickets to a concert at Ravinia, take my sons to it July 5th. I've been kind of hedging on that. We're just waiting to see, guys. That's why I'm agreeing to do these every week, for the foreseeable future. The China market, if you look at the Chinese stock market, and maybe next time I'll show you some charts on that, but they're recovering. I mean, they're recovering and actually outperforming us. Now, whenever I say outperform for the next probably 6 to 8, 10 months, all that means is losing less. So if I say this market's outperforming this one or this program's outperforming, all that means is versus the S&P 500, we're losing less. And of course, that's the goal. When you're a long-only investor and you own stocks, you want to do a little bit better than the market on the upside and lose a little bit less on the downside. And that's our goal as your portfolio manager. I don't see any more, and I'm not too far over time here. I have more time if you've got more questions. Anybody? Okay. Well, I'll start to wrap up here and keep my window open in case someone comes on. So this week was a little bit different than last week. We didn't have any slides. This time I sent them to you ahead of time. Either in the chat box or shoot me an email. Let me know if having the slides helped you or maybe not. If it did, that's great. I'll keep doing them and sending them to you. If you just want to hear me talk, I can do that too without the slides. I'll just use them here locally without saying them to you. I had one person say, no, make it like one of your fireside chats. We don't need to see you. We just need to see the data. I think my overall take has been that, people right now want to look into the eyes of the person that's managing their money, for those of you that are clients online, and just know that we're going to be fine. We're going to be fine. We're going to come out of this stronger. We did in 87, 88. We did in 2001, 2002, 2008, 2009. We're going to come out of this stronger. We're going to be a smarter country. Okay, we're going to be a financially better prepared country. Again, we were really blessed, whatever your belief system is, we were really blessed that we didn't enter this in a recession like China did, like Europe did. I mean, Germany's already in a recession. We entered this at the top peak of our financial prowess, and we did so near the end of flu season. I don't think that was an accident. So we're going to recover from this, guys. I realize when you look at your accounts, believe me, when I look at mine, I get it. but we're going to be fine. All right, I don't see any more questions. Whoops, sending the slide ahead is helpful. Okay, thank you, Nellie, appreciate that. And I will do that next time as well. And if you guys think of anything during the week, let me know. Those of you on the East Coast, did you notice? I think you did. I started an hour earlier, so it's 7 o'clock here Central. We've got clients in Mountain Time and Pacific as well. But maybe it's a little easier for you starting at 8. Let me know. But if I don't hear from you, I'm just going to plan to do it at the same time, same station next week here, and we'll see what the markets bring us. But as I always tell you guys, remember that at CB3 Financial Group, we don't just manage your assets. We become one of them. You guys have a great night, a great evening, a great weekend, and a great week ahead. Watch for my email updates Sunday night, which I'll be doing until further notice, and I'll see you back here next Thursday. Take care. Good night.